Hey guys, I'm here on macro trends. This is a 100-year historical chart of the Dow. So this is the stock chart during the entire period that the Federal Reserve has been in place. I'm going to look at the whole history of America and of the US dollar and of the stock market pretty quickly. This is Brian Lewis with MMT Investing, and things just changed. So where do we start? Okay, so let's just take off this first. So if you don't have inflation adjustment on, the whole, like, this is the Great Depression. It's just like a little bump that you can't even see. And like the Volker area is just like, it looks flat. You can't even tell. So, and then we get our big bubble here, the everything bubble here. And then the dot-com and the financial crisis are like halfway up. But if you turn on inflation adjusted, this takes the decline of the dollar out of the equation for the most part. It's not, I think the inflation numbers are not quite exactly accurate, because if they were, there'd be straight kind of trend lines instead of angled and curved ones. But let me just look at, for sort of like for a mean adjusted trend, kind of a trend bottom line for a value pricing for the stock market. And I guess let's turn on the log. So if you turn on the log scale, it will exaggerate the lower end and it will kind of shrink down the higher end, just so you can take a better look at the bottom end. And that's useful for drawing a mean reverted inflation adjusted kind of base value area for the stock market. And you can see there's this area kind of through here where that gets a bunch of reactions and maybe comes over around here somewhere, 5 or 6,000 on the Dow. And when we wind down off of bubbles, we usually break through that kind of mean reverted value area. So, 5, 4,000, somewhere in here. If we wound all the way down off the bubble and broke that kind of mean reverted line, it would be somewhere between 6 and 4,000 on the Dow, something like that. So just to show you what that looks like in nominal dollars. So if you take the log and the inflation adjusted off, that is this area right here. So people that have said, oh, wow, the stock market crashed so far and it's crazy and it can never go down any farther or something like that, here's where it can go down to, right here. So we're not that far down, just to point that out. And then let's go take a look through American history and look at the dollar. And always smash that like button right now to help me out with the YouTube algorithm. All right, so let's do inflation adjusted without the log. And let's just kind of run through American history here. So the Fed is 1913 here, like December, the end of 1913. They established the Fed, like right before Christmas break. They kind of shoved it through Congress. And then World War I is less than a year later, in the middle of 1914. And then World War I is where the British pound sort of lost its dominance as the world reserve currency. So they ran up a huge amount of debt and became unstable as the world reserve currency right around World War I. And they didn't stop being the reserve currency right then. It just kind of trended away from them being the world reserve currency and trended towards America being the world reserve currency, which officially, what here? Yeah, okay. So right here is like the Bretton Woods at the towards the end of World War II is where America officially became the world reserve currency. So I kind of switched between the British Empire, the sun never sets on the British Empire, the British pound, to the US dollar here. And that's the transition from the pound to the dollar kind of period. And then we have this little bubble here is World War I. And then we have the roaring 20s here up to 1929 here, and the Great Depression is the backside of this bubble here, and the little bounce to like 1933. So yeah, just there. That's the Great Depression, is the backside of the bubble, and then this period here is switching from the domestic U.S. dollar to kind of the world U.S. dollar as a gold-backed world reserve currency. So the whole point of Bretton Woods was America had all the gold and all the currencies were kind of messed up, and America said like everyone can back their currencies with the US dollar, and the US dollar is backed in gold, so it's basically like backing everyone's currency in gold. And that's the system that we had through this period here. So we had a domestic gold-backed, fractionally gold-backed US dollar here, and the Fed basically, the Roaring 20s, the Fed basically expanded to the max point as far as they could with the fractionally gold-backed paper dollars. And then you get this crash, the Great Depression, off the back of that. So this is a sovereign debt bubble right here. The Great Depression is a sovereign debt bubble where the currency expanded to its max point, and then you just wind down off the bubble pretty fast. And this is while the British pound was still the world reserve currency, or partially the world reserve currency. And this is when America was not yet the world reserve currency, that whole period. And then you get the transition here kind of into America being the world reserve currency, and you get this takeoff. And this bubble is America expanding as a gold-backed world reserve currency. And you get this bubble, or you get this point here. So each one of these points is kind of a switch. It's kind of a switch in the financial system, like each one of these bottoms. So around here is Bretton Woods. And then here, this top is where we switched from a gold-backed Fed dollar to an international banking unbacked dollar. And we get, let's see, 71. So here, like right around here in 71 is when Nixon closed the gold window and took the gold backing off the dollar. But really, the dollar was off of the gold standard up here already. It had already started the international banking system, had already bypassed it here. That's what this top is. And this little run down to closing the gold window was sort of like a run on the banks. Like everyone around the world started asking for the gold, tried to trade their dollars in for gold, until America was like, oh, we can't. It doesn't work like that anymore. We can't give you the gold. It's an unbacked paper dollar now. So this switch here is switch from like the gold Fed dollar to the unbacked international banking dollar, which is called the EuroDollar. That's the international banking system. And then also, if you take a look at this area, like this, if you look at interest rates, like the Fed funds rates during this whole period, the Fed funds rates ran up to here about 1981, and then they have come down since then to where we are now. And this bottom here is the Volker bottom, where Volker was the Fed chairman, and he's famous for jacking interest rates up to, not interest rates, sorry, the Fed funds rate. He's famous for jacking the Fed fund interest rate. Yeah, he's famous for jacking the Fed fund interest rate up to astronomical historical levels in order to fight inflation, because we had inflation during this period, and he's kind of reversing it. But if you look at the Fed funds rate historical chart, I mean, he didn't do anything that weird. Like the Fed funds rate was kind of wobbly, and it just kind of did this shape. It didn't matter who was in office or not or whatever. I mean, he was just he. I have a big idea that most of the political decisions and the financial decisions that are made are kind of pro-cyclical. Like the expansion of the monetary system is what drives everything, and the people who are in office and the decisions they make are a result of that expansion of the monetary system. And when Volker put the interest rates up here to this point, like that's just where the whole chart was going anyways. Like I don't think that was that crazy for him to do that. That's just where it was. But you can see that this entire everything bubble that we blew up here, the interest rates have been coming down the entire time. And then since the financial crisis to now, we've had the zero interest rate policy or close to it. I mean, it came up a little bit, but not much. And that's kind of what interest rates have looked like here during the everything bubble. And this is a big switch. And I have a bunch of trend lines on my stock charts that I want to talk about. And then also the idea that we're in a sovereign debt bubble right now. So this huge everything bubble is the expansion of the unbacked US, the unbacked EuroDollar across the world. So this is the EuroDollar expansion across the whole earth. And this is not a sovereign debt bubble because it's not just like one country, but it's the whole world reserve currency debt bubble. And we just hit the top of it. And this is what the everything bubble is. People say it's like an ETF bubble or whatever. Some people say it's a dollar bubble, but it's the EuroDollar unbacked credit system that is our world reserve currency has reached kind of its max point, and now we're unwinding off of the everything bubble. So that's the model that I'm setting up in my charts, and this is kind of the history of it. And so I think in this chart, the best analog, the best thing to look at as an example of what to expect off of this would be the Great Depression here, because that is the same kind of debt bubble, but that's just one country. Like, if you wanted to look at a chart that really gave a better idea of what this might look like, you'd have to look at another giant, like, world reserve currency fiat empire. And I know everyone says that, oh, America's the first ever fiat world reserve currency, and that's not even remotely true. Like, Mongolia was a massive world reserve currency that was fiat, like central banking fiat, and Rome was fiat. Like they had coins, but they debased the coins down to where they're just like tokens, it's fiat money. And like maybe Mongolia or Rome would be a better example if they had a Dow chart. We could look at what those bubbles look like. But um, but just on this chart, that's the idea of kind of a bubble and these inflection points where we kind of expanded to the max point where that currency system could expand, and then you have to change the system. And we have changed the system every time, and this time the system is changing to sort of an MMT system instead of the credit system. So they're kind of winding the banks back in. So around the financial crisis, the banks were acting crazy and making super risky loans, and that ended up in this crash. And then since then, banking hasn't been so profitable. And now during this crash, the banks don't want to lend any money. And it's a really, really big dollar shortage across the whole world. Nobody wants to lend. Everyone's holding on to dollars. It's destroying dollars. And we're getting this, just the backside of a bubble. It's just the contraction. It's just a long-term contraction of a credit cycle. This is all a giant credit cycle. And that's a look. Yeah, that's a look. So these points here are the points where I'm drawing my trend lines off of. We have this 2018 bottom, and there's a trend line that goes through the chart. And we have this financial crisis bottom, and we have a trend line that goes through the chart. And then there's this Volker bottom, and there's a trend line that goes through the chart right at that bottom point there. And that's what we're looking at. So we have been unwinding. Also notice, like, this is kind of a semi-steep bull line and then a steeper bull line, and then after the sort of Volmageddon double buttons, we have like this parabolic kind of blow off top. So each one of these trend lines is steeper and steeper, and we've broken two of them, and we bounced off of this third one. And right now we're on top of this bull trap right here, and I want to see if we come down and break this probably not that far, but just break this Volker bottom bull market line. And once we break that line and back test it, we're setting up the backside of this everything bubble to unwind. And we're looking at a longer term bear market. So this is the history of the American dollar and the world reserve currency, and sort of gold backing it, and then switching to an not only unbacked, but this was a central Fed fractionally gold backed dollar here. And this is not only unbacked, but it is provided by international banks. It's not provided by the Fed. The Fed doesn't make the world dollar. It's the EuroDollar system. And those dollar loans are provided by international banks. And that system has just now hit the wall where it's not working anymore. It started to screw up in the financial crisis, and it just broke now. And so now they're making a new dollar where the Fed is reconnecting and making all these programs and kind of stepping in where all the banks are failing. So that's the environment that we're investing in right now. And this is not investment advice. And please hit the like button. And yeah, here's a history model of kind of what to look at and why I think we're in a bubble and what the bubble actually looks like and where the bottom actually is. And it's not certain that we'll unwind all the way down off this bubble. I mean, this could be like a little point and we could keep going up, but just the shape where we got increasingly sharper and shorter ups and then a huge blow off looks a whole lot like the Great Depression, the kind of parabolic blow off, and then it looks a lot like the Great Depression. And yeah, so I mean, this whole period here where we're coming down off the everything bubble would be the worldwide Great Depression, whatever that would be called. Yeah, okay. So that is the Federal Reserve and the dollar and how it has changed a lot. It's been called the dollar the whole time, but the system has changed several times, and it just changed again. 2020 marked a change, another change in the system, and we'll have to see what it looks like, and we have to invest in this environment. So good luck.